Yeah, everybody's all psyched up. You got the full list of Avengers are in place. Donald Trump is your president. Everything is fantastic. So I've got Kevin DeMeritt from Lear Capital all queued up. I got a couple, like about a 2-minute video I want to play before I bring Kevin in. Kevin and Lear Capital. Kevin is the founder of Lear Capital. Yes, they are a partner with our channel, which I thank them greatly for, but this isn't any infomercial. There's a whole lot of stuff going on in regards to gold, a whole lot of stuff, and it impacts our economy hugely. So I think it's very important that we find out what in the heck is going on in the gold market. Check this out.
Starts with gold, and I've been following the COMEX. There's something going on with gold, and nobody really knows what it is. Somebody here in the United States is buying a crap load of gold. We think, I hope, it's the Treasury or the central bank, the Fed. But somebody is taking huge physical deliveries, and it's causing shortages in London, where they buy and sell gold. There's shortages now of gold because somebody is buying it and shipping it here. Somebody with very deep pockets. Okay, so why? Now, this is all theory. That's fact. Here's the theory of what's going on. They're preparing for a full-on gold audit. We talked about this yesterday. The government right now claims on its balance sheet as an asset all of this gold, and it's valued at $45 an ounce. In case you haven't heard, it's $2,900 an ounce. So they're talking now about boosting the price of gold, at least market to market, but maybe even making it $5,000 an ounce, okay? If that happens, the balance sheet starts to fall into line, and our debt to GDP is not as bad as it really is.
We're going to go into Fort Knox to make sure the gold is there.
Are they going to?
You know that we're going to go into Fort Knox. Do you know about that?
Sir,
That was a bad bump.
are they going to eliminate more national security positions, civilians there?
We'll see what happens. But one of the things we do want to look, I mean, we hope everything's fine with Fort Knox, but we're going to go to Fort Knox, the fabled Fort Knox, to make sure the gold is there.
Where would the president brought up?
If the gold isn't there, we're going to be very upset.
I want to go back first to what Glenn Beck said, because he said something there. He said a couple things, a mouthful. Number one, did they really value the gold at like $45 an ounce and have never updated it? Are we looking at let's not get to question number two. Question number one, whatever is supposed to be in there, is it truly valued at $45 an ounce?
No, it's valued at $42.22, actually. So a little bit worse than $45 an ounce. Yes, they have it on the balance sheet at $45 an ounce. And the history of this is fascinating, Barry. The reason that it's valued at this amount is because if you go back to 1929, gold was actually confiscated. So at the time, if you had gold, it was confiscated at $20 an ounce. Okay? The reason it was confiscated is because other countries around the world that we owed a lot of money to from wars said, I'm not going to take your US dollar. I don't want paper currency. I want actual gold.
Okay.
So they agreed to take this gold. The government went out and confiscated gold at $20 an ounce from all the citizens. The citizens gave the gold up at $20 an ounce. And the government immediately increased the value of gold to $35 an ounce. So they paid other countries with gold that was increased by 75%. So we paid less of the debt with the physical gold because they increased the value. They increased it again to $42.22, and that's where it has sat for 35, 40 years now.
Why? Why have they not shown a true value of what's supposed to be there?
You know, no one has a great answer for it. It's fairly easy to calculate because we know supposedly, not for sure, that there's 261 million ounces, or should be 261 million ounces in Fort Knox, or actually there's 3 different depositories. So when they say Fort Knox, there's 2 other places that hold the gold, but that's what they mean. There should be 261 million ounces. So today, if you look at the Fed's balance sheet, it will say $11 billion worth of value for the gold. However, if they valued it at today's current market-to-market value, it would be approximately $500 billion. What Glenn was talking about was, then what can we do to help our balance sheet in the United States? And one of the suggestions that were flown out there was, hey, why don't we increase the gold value to $5,000 an ounce? Everybody who's purchased gold would be very happy, because when the government revalues it at $5,000 an ounce, everybody else in the world is going to do exactly the same thing, and that's going to be the value of gold.
Right. So we can arbitrarily say it is now worth this amount of money? I mean, how do you just assign a value to it?
Well, that's exactly what they did in 1929. You know, we had $20 gold pieces, so they were purchasing them at $20, but because the economy was not in the greatest shape, obviously, through the Great Depression, and so many people were wanting to purchase gold that it was probably worth around $32 an ounce, and then the government just raised it to $35, and everybody agreed around the world, hey, we're going to value the gold at $35 an ounce. It was illegal for citizens to own gold, and so $35 an ounce became the new price in gold, which was 75% higher than what it was just weeks earlier.
That's crazy. That's absolutely crazy. So the second thing that Glenn said, and are people actually trying to corner the market like it's what was that movie with Dan Aykroyd and Trading Places, where the guy tried to corner the orange juice market? Do you think some entity is out there trying to corner the gold market, actually buying it up?
No, I think there's a few other things that are happening. One is, if the gold is not in Fort Knox, you've got to get some gold back into Fort Knox. Another kind of nutty story is, if you go back to 1999, 2000, this is exactly what happened to the Central Bank of London. So all central banks can lease out their gold. It's legal to lease out the gold. They make about 3% a year on it. So they lease it out and they make a little interest on it. London leased out their gold, and they did something called rehypothecation, meaning that they leased it out to somebody, then they leased the same amount out to somebody else. Hey, they're a central bank, so nobody really audits them. But once they do that, and there's not enough physical gold to be repaid to the central bank, then what happens? Well, now you don't have the gold, and you have these people saying, I can't replace it with physical gold. So they said, London said, fine, we are going to liquidate half of all of our central bank physical gold. So what does that accomplish? What that accomplishes is, you don't have to pay me back gold, you have to pay me back paper dollars. And there's enough of paper dollars to pay me back, but there's not enough physical gold.
Wow.
They sold that gold, Barry, between $256 an ounce and $290 an ounce. Soon as it was done and people realized that the gold wasn't actually there, the price of gold went to $350, $375 an ounce almost immediately. And so if you think about what's happening right now, if this is the case and that gold is actually going back into the central bank, because there is not enough physical gold to replace it, they're just taking it from everywhere. So the first place we heard about was London, but an article's out today that the Swiss have exported the highest amount of gold in 13 years. So to give you some sort of an idea, the article says 192 tons of gold was delivered to the United States in January, 64 tons in December. This is accelerating. So it's not just London, it's all around the world that the physical gold is being hoarded up by central banks and whoever else is doing this at huge numbers that we've never seen before ever. I mean, in a month, 192 metric tons is billions and billions of dollars worth of gold.
Why is it happening? What I mean, yes, Trump got inaugurated on January 20th. Did all of a sudden people go, oh my God, we're in trouble, and all of a sudden decide to try and repatriate some of this gold? Why is it happening now?
Well, two reasons, in my opinion. One is because they're going to go look at Fort Knox, and if Fort Knox doesn't have the gold, you lose an enormous amount of faith in the U.S. government and the U.S. currency. So we got to get that gold back there if it isn't in there before somebody takes a peek at it, right? That could be one reason, and you would need a lot of gold. If it's gone, it's not going to be a little bit. It's probably going to be bigger amounts like we're seeing here. Or number two, and just as likely is people are nervous about the tariffs, right? Tariffs are inflationary. Is he really going to put tariffs out at 25% and keep them there? We had a discussion about this just a month ago, and I said, look, these other countries have not been playing fair with us, and he's making them play fair by going out with 25%. If they end up at 10% or 5%, so be it. But all this trade is going to become a lot more fair. Is there going to be pain before that? Probably is, because you've got to start them off. You've got to not just pretend like it's real, but you've got to do it. And he will. That's going to cause some inflation, and I think from what we're seeing, either on the professional side, the institutional side, or the individual side, people are a little nervous about that and saying, hey, look, I just want some gold just in case inflation goes up a little bit higher than we possibly think. And that's driving a lot of central bank buying. It's a lot of hedge fund and institutional buying, and a lot of individuals are kind of getting on now.
Now, if it's not there, I mean, basically at this point, everyone's talking about it. The eyes are on this thing. It's not like you can drive up a Hertz rental truck and bring a whole bunch of gold back into Fort Knox or any of the other repositories at this point without a whole bunch of people seeing what's going on. Isn't it too late for them to, restock?
Well, okay, so think of restocking as you've leased out some gold to people, okay? And those people have taken that gold and they've done something with it. Let's just say it was ABC Corporation that received that gold and is paying the central bank for this. You don't actually have to have it back in Fort Knox. You just need to have it available if you've leased it and you haven't paid it back. You need to have it to prove you have it. So you don't have to truck it in. If you don't have it, and you can replace it and have it now before they do this audit, that's all that really needs to happen. And that's probably more likely that what's happening rather than the gold actually is out of Fort Knox and we're going to put it back in.
Now, I can't even fathom why no one has done any kind of audit, any sort of reconciliation since 1974. 50 years ago. I don't know any mortgage company, I don't know any bank that does a loan or anything and doesn't check on their whether it's leased or whatever their collateral is, not even check on it for 50 years. Is that designed? Do you think that was intentional to make sure that they could do whatever nefarious things they wanted to do and nobody was ever going to check?
If they transact like other central banks have, then this rehypothecation, think about rehypothecation as I'm pledging someone collateral, right? I'm saying, here's gold, I'm going to lease it to you, and I lease it to the first person. Or better yet, let's use a piece of property. I go out and I borrow money on a piece of property, and I can trick another lender into saying, hey, I don't really have this loan on this piece of property. I'm going to get another loan from you. That's basically rehypothecation. I've borrowed money on it from two different sources. If the government was doing that, and it looked like London was, and other central banks may, then who's auditing them? And if you audited them, then you would go, hey, this is happening. It's not supposed to happen. And why are we even leasing it out in the first place? But I don't think the government needs to make 3% on that. Wow. So if rehypothecation is happening, and they're leasing it out to different people and saying the asset's still there for everybody, then that would be a reason why no one wants to audit Fort Knox.
So why is Trump intimating that? How does it fit into his economic plan to be openly stating at this point, the first person who's ever mentioned it. I mean, I never even questioned. We all grew up just thinking there was a whole bunch of gold in Fort Knox. Why now do you think with his economic plan does he want this to happen? Because obviously it's something that he's initiated. Nobody else was talking about auditing Fort Knox. Why did the president, just in his first 30 days, decide, let's open the doors and see what's in there?
Yeah, number one, I think he wants to be more transparent than some of these other politicians, which would be a gigantic breath of fresh air. Number two, he understands a balance sheet, an income statement, and the things that go along with how do you balance the budget or how do you make the U.S. Currency stronger. if you're valuing gold at $42.22 and the entire value of all of that gold is $11 billion, then the asset sitting on the Federal Reserve balance sheet is $11 billion. If you just mark that to market, then you're at 500 billion. If you raise it to 5,000, you have $1 trillion.
Wow.
So
Wow.
Why do you leave this smaller balance on there where you can use this to strengthen up the dollar or strengthen up the economy or use it in a way to kind of help out the balance sheet when most politicians are trying to, decrease the value of the dollar by printing money all the time? Here's a way to kind of say, okay, let's get things back to where they should be and possibly think of ways that we can make the balance sheet even stronger.
Oh, okay.
Because if you take a portion of gold, even at $1 trillion, and you have $38 trillion worth of just debt, you still have a very small portion of gold backing each one of the dollars.
Right.
But it's extremely helpful. And we know it's helpful because when we place sanctions on Russia and they back their dollar by a little portion, the ruble, by a little portion of gold, the Russian ruble immediately went up 10% and people trusted it.
Wow.
Backing your dollar, same thing BRICS is trying to do. Hey, we want to outdo the dollar. Let's back a little bit of it by gold and give it the strength and security that people are looking for around the world.
Okay, wow. That makes a lot. So Trump was in office before. This didn't happen. Who's the brainchild, do you think, behind this? Is it Scott Bessent? Bessent, I guess that's how you say his name. Somebody had to come up with this idea in terms of, one, use the tariffs to try and reduce income taxes, and now also let's see what we can do with the gold market with what you just said in terms of not going. I don't think what you're saying is they want to go to a completely gold standard, but at least revalue the gold. Who do you think came up with this?
Yeah, it's a great question. You keep thinking about, there's a lot of smart people there that understand how, economics and financial statements work. And I don't really know. You'd have to get a lot of people around the drawing board to make sure that you don't do something in the financial system that's too wacky that just all of a sudden goes the wrong way. I don't think one person could really think of it. Maybe one person had an idea and a bunch of people vetted the idea and tried to come up with, but it is a good idea.
Yeah.
I mean, going and valuing this so people understand, and people have doubted it for years and years and years, and I think other countries may have doubted it, but if it's there, it's a good thing. If it's not there, it's a horrible thing, but at least we know. Right. It probably skyrockets the price of gold if it's not there, and if it is there and they start raising the value, it's going to skyrocket it anyway. So I think it's a win-win for gold, but it's a bigger win-win if it's there for the U.S. balance sheet. And Trump revalues the gold on it.
Is there any reason you would see, and this is a personal question that just popped up, is there any reason you would see why any politician on the other side would have a problem with auditing Fort Knox? Well,
if they were the one that said, hey, it's okay to keep leasing,
yeah.
Right, when it's already been leased, probably that person does not want to have his name out there. But I can't think of anybody in reality who would not want to have this audited and have transparency, for that amount of money for the government. It's a $500 billion. It isn't a drop in the bucket.
Wow, that's just so much money. So do you think at some point he's going to try and go back to a gold standard, or that's not feasible?
It's not feasible the way we had it, prior. Mm-hmm. So look, what are the reasons we went off the gold standard would be the first question. The reason we went off the gold standard is because the government can print money willy-nilly without having to back it with anything, right? If I could just print money and I didn't have to buy some gold to back some portion of it, then I could just print as much as paper as I want. And that's exactly what they've done. If we had to go back on the gold standard, then how do we value this gold, or what portion of the dollar do we assign the gold to? It would have to be fractions of a fraction of a fraction. But what would it do to the value of the dollar? The value of the dollar would immediately stop going down year after year.
Right.
They would prohibit them from printing money, trillions of dollars at a time, because even if you take a small fraction of that in gold, there isn't enough gold. So you get a much stronger currency out of this. So that would be the reason to go back on, even if it was a tiny portion. It just stops the printing presses and gives everybody around the world the confidence in the dollar again, and it strengthens our entire economy and our government.
Oh, wow. Okay. So we've heard President Trump speak a number of times, even as recently as last night. He did a big conference down here in South Miami, talking to a lot of the Saudi business people, big money audience. And again, he's talking about having to generate a lot more power. I'm talking about electricity and energy and things of that nature, because he wants the United States to be a global leader in both AI, and in order to do that, what is the role that gold has with his vision of becoming this big colossal leader in AI?
Yeah, there's really two parts to this, and the second one is the most important for people to understand, because I don't believe it's been out in the press enough. So the first part of your question is, how does gold, how does it play into this AI technology? Well, this big race to dominate AI is all about economic power, national security, and global, influence. So the U.S. is trying to position itself as the leader in this AI, and you need to spend billions, if not trillions of dollars, literally trillions of dollars, to become the leader in this AI. If all of the countries are trying to do this, that's a lot of money that's being spent, and too much money chasing too few goods is cause for inflation. So if you have tariffs and this AI situation, and everybody's spending money and things are costing a lot more money, then a couple of things typically happen. Usually you see consumer spending start to slow down because you're spending more money on the same amount of goods. You see economic growth start to slow down. That's one of the reasons that Walmart came out today and said, hey, look, we don't think that the economy and the spending is going to be as high as we continued or into the future as we thought. So AI just takes up enormous amounts of money, and that is going to cause inflation. Why? Why is this almost guaranteed? Because this global race, whoever comes out on top of AI will control a huge portion of the world's economy and defense capabilities. So think about it. AI is not going to just disrupt how we do business, but it's a global power structure here that, if you can figure out how to use AI for defense and those kinds of things, the shift in power economically because of better efficiencies, but also because of defense. If I can get a robot to go, sorry for saying this, kill 1,000 people and one person can kill 10, I can dominate with very few people, drones, ships, planes, everything. That dominance is what Trump is talking about without trying to scare people, in my personal opinion. Everybody understands that this thing is so powerful that if you are if China becomes number one in AI, it doesn't matter they have 1 billion, 2 billion more people than us. Right. You don't need that with AI. So look, if you're looking ahead, you don't want to just be betting on AI. You're also wanting a hedge against the economic shift and the economic power transfer that may happen because of AI. So we have to spend this money. There's no choice in spending this money on AI. And that's what's going to happen. And that, to me, is one of the most concerning things about the economy over the next 5 or 10 years, is who is going to be number one. You could get a small country that figures something out. I mean, China woke up and all of a sudden this DeepSeek thing cost fractions of what OpenAI and some of these other people have created. And if other countries can do the same thing and advance faster, this is such a scary technology that you can plug it into things that maybe we don't want to see.
Wow. I have not thought of it that way in terms of its military applications. That you're absolutely right. Because I mean, see, I don't know if you've seen the AI robotic dog that can basically be a sentry, and it goes around your property and it can shoot even. And it's a robotic dog on 4 legs. I'm like, this is crazy. Shoot fire, all kinds of different things. Oh wow, that's insane. So if all of this Fort Knox AI all has something to do with the gold market, how does it then reflect onto silver or does it at all?
Oh, yeah. I mean, Russia just came out and said, hey, we could use silver in our central bank because gold is just getting so hard to get that the prices have skyrocketed. But usually what you'll see is the price of gold increase and then the price of silver follows. And that's exactly what we're starting to see. Even today, you see the price of silver up fairly substantially. But the last time gold was at 2,000 or over 2,000, the price of silver was $49 an ounce, and we're hovering right now at about high 33s to $34 an ounce today. It is completely undervalued. It is on sale. My personal opinion, I would be more heavily weighted on the silver side right now because it's got a long way to go just to hit its $49. But at $2,900 gold, you could see silver in the 50s, maybe even the 60s to play a catch-up game.
And it's obviously more affordable. I mean, we've had conversations on this show probably 3 or 4 different times, and that same question comes up, and I'm just going to broach it now before somebody asks it in the chat. Yes, if you call Kevin, if you call any of the people over at Lear Capital, they're going to have a minimum buy, but if you go to the website, you can buy at a much steeper, a less price than it would be if you actually talked to one of the reps. And I keep having to stress that because, Kevin, what's the weight of this? This thing that is that like 1/8 of an ounce or something? What's this size? Can you see?
That's 1/10 of an ounce.
What? 1/10 of an ounce?
Yeah.
Okay, so
let me see it. That's a quarter of an ounce.
Yeah, it's about the size of a nickel, and then this is a full ounce of silver right here, which just about anybody can afford. I mean, would you say it's like $33 right now?
$34.
$34. So let me see if there's any questions. Somebody goes, "I love my silver." I hope you bought it from Lear. My rubles are worthless. Bitcoin. Keep your eyes on President Trump. Give them hell. I love my silver. Okay. Is silver a safer investment than gold? Would you say that at this point, with all the volatility of not knowing what's going to happen if they audit Fort Knox?
I would say silver's more undervalued, so the volatility for silver would be less. But risky is a hard question to answer, so I just try to look at undervalued. If it's undervalued, even if gold price comes down to $2,000 an ounce, which would have to drop by $900, the price of silver was still at $2,049, and here we are at $34. So I just think you'd get less volatility over time and a higher rate of return. Hey, Barry,
I know you got to jump.
The guy you had on the beginning actually has a robotic dog, so Glenn Beck, and that's who I have to jump off this and talk to him a little bit.
So we're also partners
with them.
You're bumping me for Glenn Beck. Okay. Good, Kevin. Tell us hi. He needs to come on my show so I can interview him. Okay. Kevin, I know you have a hard stop. We'll talk again real soon, especially after we see whatever happens. Enjoy your time with Glenn and talk to you real soon. Thank you very much.
Thanks so much. Yeah.